A few options for your YouTube intro, ranging in tone. Choose the one that best fits your style. Option 1, direct and enthusiastic. Hey everyone, and welcome back to Forex Scope, your go-to source for in-depth Forex analysis. Today, we're diving deep into GBPJPY on the 15-minute and 1-minute charts. If you're looking for clear signals and future price direction, you're in the right place. Don't forget to hit that subscribe button and the notification bell so you never miss out on our latest insights. Option 2, friendly and engaging. What's up, traders? It's your host from Forex Scope, ready to bring you another exciting Forex breakdown. This time, we're zeroing in on GBPJPY, dissecting both the 15-minute and 1-minute timeframes to uncover its potential moves. If you want to stay ahead of the curve and get actionable trading signals, make sure you subscribe to Forex Scope. Let's get started. Option 3, concise and professional. Welcome back to Forex Scope. In today's video, we're analyzing GBPJPY across the 15-minute and 1-minute timeframes, providing you with key insights into its future price action and potential trading opportunities. For consistent, data-driven Forex analysis, please subscribe to our channel. Let's begin our analysis. Option 4, a bit more casual. What's happening, Forex fam? It's Forex Scope here, and today we've got a really interesting setup brewing with GBPJPY. We're going to be breaking it down on the 15-minute and 1-minute charts to give you the clearest picture possible of what's coming next. If you're all about catching those profitable moves, smash that subscribe button and join the Forex Scope community. The resistance zone is identified around the price level where multiple bearish candles encountered selling pressure, pushing the price down from its highs. Specifically, the candles between 1800 hours and 1815 on November 4, 2025, show a clear pattern of rejection near the upper boundary of this zone. The price tested this area and failed to break above it convincingly, indicating a strong sell-off originating from this price range. The presence of significant downward wicks suggests that buyers attempted to push the price higher but were met with strong resistance, leading to a reversal. This area acted as a ceiling, preventing further upward movement and marking a significant point of supply. The volume during these rejections also supports the idea of strong selling interest at these elevated price levels, solidifying it as a key resistance. The support zone is established around the price level where the price found buying interest, halting further declines. The candles between 1830 and 1845 on November 4, 2025, demonstrate this. Despite attempts to push the price lower, the market showed resilience, with prices bouncing back from the lower boundary of this zone. The formations here, characterized by potential bullish reversals or indecision after a downtrend, indicate that buyers stepped in to absorb the selling pressure. The lower shadows of these candles suggest that sellers pushed the price down, but buyers quickly entered the market, creating upward pressure and preventing a deeper fall. This price area acted as a floor, absorbing selling pressure and initiating a potential upward move. The volume observed during these periods also hints at increased buying activity, confirming this as a significant support level where demand outweighs supply. The support zone is identified between the timestamps 176-227-9440 and 176-227-9920. During this period, the price exhibited a clear downward movement followed by a consolidation phase before attempting to rebound. Specifically, the price traded between a high of 200.075 and a low of 199.938. This range was tested multiple times, indicating significant buying interest at these lower levels. The presence of multiple candles with long lower wicks within this zone suggests that sellers tried to push the price down, but buyers consistently stepped in, preventing further significant declines. The sideways movement observed towards the end of this period, where the price hovered around 199.970 to 199.980, further strengthens this area as a zone of accumulation. The fact that the price repeatedly found a floor in this area, with some candles even poking below the lower boundary but quickly reversing, signifies a strong demand zone. The interplay between sellers pushing down and buyers absorbing the selling pressure creates a robust support level. This area shows a clear reaction to the lower price points, which is a characteristic of effective price action support. The resistance zone is identified between the timestamps 176-227-3680 and 176-227-3920. In this timeframe, the price experienced a notable upward push followed by a struggle to break higher. The price moved between a high of 200.131 and a low of 200.112. The resistance is characterized by a period where the price attempted to break above the 200.130 level but was repeatedly met with selling pressure, causing it to stall and eventually retreat. The candles in this zone show smaller bodies and some longer upper wicks, indicating that while buyers were trying to push the price up, sellers were actively defending this upper boundary. The period around 176-227-3740 to 176-227-3800 shows the price testing the upper limits, reaching highs of 200.167 and 200.163, but failing to sustain these levels, which points to strong selling interest. This struggle to advance higher, coupled with the repeated rejections, establishes a clear resistance area where supply overwhelmed demand. The price action within this defined range demonstrates a ceiling that the market found difficult to surpass, making it a significant resistance level. The recent price action on GBPJPY, specifically within the 1-minute timeframe, suggests a potential short-term downtrend. The current price is hovering near a support zone identified between 199.961 and 200.011, marked by previous price consolidations and upward bounces. However, the recent struggle to break above resistance levels, coupled with the lower highs forming after the initial test of the 200.074 resistance, indicates selling pressure is reasserting itself. The Fibonacci retracement levels also point to potential downside targets, with the current price situated above the 38.2% level and potentially heading towards the 50% or 61.8% retracement. The Bollinger Bands are beginning to widen, suggesting increased volatility, and the price is currently trading below the middle band, reinforcing a bearish bias. The tick volume has been moderate but shows periods of increased selling activity. This price movement, if it continues to break below the immediate support, could lead to a test of lower levels, potentially reaching the 199.951 Fibonacci level and even further down if the selling momentum intensifies. The confluence of these factors suggests a cautious approach with a slight bearish inclination in the immediate future, before any potential larger trend reversal can be confirmed. Traders should watch for a decisive break below the 199.961 support for confirmation of further downside movement. The interplay between resistance, support, and Fibonacci levels suggests a volatile but potentially predictable path for the price in the short term.